Hi guys, welcome to a new week. Last week was quite intense in the market. So let's see what we're going to have this week. I will start with DXY. DXY is what I normally look at before I look at Euro USD because DXY is Euro USD inverted, right? So I'll check what DXY is doing. So we have this consolidation here around this place, this massive consolidation that pushed the market upwards. Then we have this consolidation here. This consolidation, the second consolidation is just looking exactly like the first consolidation, sorry. So, and we have also a push here. So to me, this consolidation is quite looking like this consolidation and this consolidation, just that in a slightly different pattern for the market to continue going up. However, we have some levels on the monthly time frame that have currently resisted the market several times at this region. If you look at it carefully, you're going to see this is a very significant level in the market. Why? Because the market resisted several times and pushed the market up several times. And if you come to the base as well, you're going to see that there is a significant rejection around this area as well. So this level is a quite significant level. However, we're going to be looking very carefully. There are two ways that you can trade this market. You can actually trade the market continuation to the upside, at least to get to this level. But some people will just, okay, let me just wait for the breakout of the consolidation because basically this is a consolidation. If you check critically, it has been going up, down, up, down, up, down, no specific direction. But before this market is going to have a specific direction, we are going to break above this level. Once we break above this level, then we are sure about to get to this level. Then if we break this level, then continuation to the upside. So there is this counter trend line that have been here for a very long time, since 2011, that you're going to also see around this region. First touch, second touch, and this is also looking like a third touch of the trend line. Let's zoom out a little bit. You're going to see that the market actually rejected from this level significantly. I thought this market is actually going to be bearish, if you ask me, as of last month, because we have a significant bearish rejection downwards. So I think for me presently, if this bearish candle cannot continue going down and this month actually closed bullish, I think the market is going to get to this place. And when we break this level, the next level target is going to be around this level. So for now, on the monthly time frame, I am still bullish on the XY. So let's come to the weekly time frame. My conclusion on the monthly time frame is I'm still bullish on the XY. Let's look at what the weekly time frame is doing. The weekly time frame is just consolidating a lot. If you see moving up, moving down, but what I can see, the most recent price action that I can see around this region is this. We have head, we have left shoulder, and we have right shoulder, and we have a significant push towards the upside. So this is just screaming to me like the market wants to continue going up, if you ask me, because if you check on the monthly time frame, it's not looking like an exhaustion though. It's not looking like although we have a bearish engulfing candlestick pattern form around this place. If you check this candle, the candle that are forming here is looking corrective to me. It's not looking impulsive. So I am still looking bullish on DXY on the weekly time frame. However, there is a level that the market is just going to find a base to push the market upwards. It's going to touch this level. So let's come to our daily time frame. Let's see what the daily candles are doing. So, however, this daily time frame is what I am kind of looking at. If you check on the daily time frame, we have this significant double bottom around this area that pushed the market upwards. Then this area around this region is officially a double top. So I'm not going to be worried so much about that double top anymore because if you look at this area, this level around this area, you're going to see that there is a significant correction around this area to test this region for continuation to the upside. So I am thinking that the market is going to come back to test around this region for continuation to the upside. So DXY, I am bullish, but we are going to have a move towards the downside a bit before the continuation to the upside. I am 80% bullish on DXY. So if I'm 80% bullish on DXY, then Euro USD is going to be bearish. So, but before the bullish bias, we are going to have a test of this level, this region around this area, because this is an important level. If you see, when we have a break above, we have a retest, then a continuation to the upside. If you see this level as well, when we have a break above, we have a retest and come back and retest it for the second time for a continuation to the upside. So what I think is this, we're going to have a retest of this level, this region again for a continuation to the upside. So if you want to take advantage of the sell, but I think the buy is more important than the sell. So just wait for this region instead of taking advantage of the sell, just wait for this region. If the market bounce out of this area, then we're going to be looking for buy. So this is what I'm looking at here. I'm seeing the market. This is a lot of top. This tops needs to be mitigated, come down to form a base around this area for continuation to the upside. That's my thought on DXY. DXY form a base. We have to wait for a base, a double bottom or something around this area. Do not just place a trade for a buy. Just wait for confirmation before you place the trade for long around this area. Just wait for confirmation. So this is how I'm going to be expecting the market to be. I'm bullish on DXY and Euro USD. I'm going to be bearish on Euro USD. So I'm really bullish on DXY. So if I see a clear base around this area, a bottom around this area, then I'm going to be taking the trade for a buy. However, I think this market might still come down to revisit this area for continuation to the upside. That's my thought on the XY. So let's go to Euro USD and see what Euro USD is doing. Euro USD is going to be DXY inverted. However, I'm going to be looking at what Euro USD is going to be doing. When you check what Euro USD is doing, we have a series of consolidation around this area. We have a triple bottom that pushed the market upwards. We have this correction. We have this double top around this area. We have this correction around this area, this drop around this area. We have a series of consolidation around this area. We have this one around this area. We have a correction and we have a push towards the upside. Initially, I was expecting maybe a more correction towards this area for continuation to the upside, but that did not happen. It just pushed up significantly. Maybe this weak rejection was what's actually tested this level that I was thinking about. Yeah, I think. So now we have a series of consolidation around this area. This is no longer looking bullish to me as of the moment because we have rejection, several rejection. So this is just like a consolidation to me as of the moment. So, and the consolidation is not looking bullish anymore. This base, what was supposed to take the market upwards, but it's tall around this area, this resistance around this area that have rejected the market several times, and this month is now giving a bearish candle. So Euro USD and bearish as of the moment. Maybe we're going to have a little bit of pullback to test some significant levels in the market, I think. This is just a whole lot of consolidation. You can look at this as a head, left shoulder, right shoulder. This is just consolidation. So, basically this push upwards, this is now also looking like a third touch of the trend line, but I'm not sure this third touch of the trend line wants to push the market upwards. I think that this trend line rejection just want to push this market to this level around this area. I think It wants to push the market towards this level. If you see a double top around this area or this level, because this can actually push up to get to this level. There's a supply region around this area that the market can just manipulate. Originally, this is supposed to be the level that the market is going to test, but there can be a little bit of a manipulation to test this level and drop towards the downside. So I'm expecting a manipulation. However, if there is no manipulation around this area to test this supply region around this level, then I'll put my stop loss above this place. So I'm going to be expecting a manipulation around this area to touch this level. If I get a manipulation, then a drop around this area, it's going to be nice to see. It's going to be really nice to see. However, I'm still expecting a sell. This is not a buy. This is a sell. However, this level can push up easily, manipulate this level, then drop. I am 80% bearish on Euro USD. However, this level or this level, the market is going to reject for continuation to the downside. So we can take advantage of the sell bias, not the buy bias, the sell bias. Why is it the sell bias only? Because if you're buying from this area, how about if the market rejects here and continue downwards? Or here, how about if there is no manipulation to test this level? So that's why I'm not going to be taking the buy bias, but I'm going to be taking the sell bias. So I'm going to be waiting for the market here. Double bottom, double top here, double top here, rejection to the downside, continuation to the downside. That's my thought on Euro USD. So let's check what the supply region that I'm going to be looking at here. This supply region is what I'm going to be looking at. The market might come to test this supply region again. It's rejected here, rejected here. So this is actually consolidative to me. It's not. This looks like a consolidation for a continuation to the downside. So if I see a series of tops here around this area, then I know that the market don't want to manipulate this level. But if I see a break above, I know that the market wants to test this level for a continuation to the downside. That's my thought on Euro USD as of this week. So the next pair that I'm going to be checking is what Euro GDP is doing. Euro GDP, I've already explained Euro GDP as of last month. Last week, I already explained Euro GDP, but Euro GDP is kind of really consolidative as of the moment. We have this inverted and massive inverted and shoulder pattern that have consolidated for a long that created this four bottoms around this area and a push, and this is now looking like a correction for continuing. If you see the push, you see where the market is coming from. It's coming from here. So this is now looking like a correction in my eyes for continue. It's not looking like it wants to continue downward, but it's looking like a correction. But however, the market is consolidation of a consolidative as of the moment. So initially, I was like saying I gave a rule concerning this market. If as long as we stay below this level, I'm not going to be placing a trade on the market. You see this level, until we break above this level, that is when I'm going to be considering a buy. Why? Because until we break below this neckline, that's when I'm going to be considering sell for this market. Why? Because this is the neckline. This can actually be a triple bottom for a continuation to the upside. And this can actually be here, the left shoulder and the right shoulder. The neckline must be broken before I'm going to be selling this market, and the shoulder region must be broken before I'm going to buy this market. That's my thought. And we also have a major resistance around this area. So as of the moment, Euro GDP is a no-go area. As of the moment, it's just consolidative. It can get to this point. You know why? I don't want to buy this market as of it can get to this area, consolidate and still drop. Why? Because this is a major resistance. So any area in the market can actually reverse this market downwards or push the market upward. So that's my thought on on Euro GDP as of the moment. So I'm not really considering anything on this pair. We have multiple bottom around this area. It's looking bullish. It's kind of looking bullish to me. But this level is a major resistance. It has gotten to this level. It can come here, reverse down, it can go here. So that's why I'm staying away from Euro GDP as of the moment. So the next way I'm going to be checking is BTC. BTC, on the other hand, is looking good, is looking bearish to me as of the moment. BTC, let's see what the monthly candles are doing. Monthly candle actually is looking bearish for BTC. We have this push, we have the correction, we have this push, we have this double bottom that correct the market down. We have this push, we have this correction, this demand level around this area. So we have push, we have correction, we have push, and this drop was supposed to correct a little bit, but no correction. That's why this area just came to test the neckline for a continuation to the downside. As of the moment, BTC actually closed bearish on the monthly time frame. So we're bearish on BTC. BTC just came to test the neckline of this structure here, this double top for continuation to the downside. So let's go to the weekly time frame and see what the weekly candles are doing. The weekly candles is looking nice as well. We have first touch, second touch, and this is looking like the third touch of the trend line. However, this is a double top around this area. We have a push, a drop, a correction. So we have a drop, we have another correction. This is just Fibonacci, I think. Let me check. This is Fibonacci. These are Fibonacci region. Let's get it from this area. These are Fibonacci. Latest swing high, you test from the shoulder level, you get to this level. Then this is also a Fibonacci as well. This is also a Fibonacci as well. So that's why I'm looking at Euro USD bearish, because if you look carefully, this correction for a drop is just similar like this correction for continuation to the downside. So that's my thought on BTC as of the moment. We're bearish on BTC as of the moment, at least to the 100% retracement or more to the 100% retracement. So on the daily time frame, what am I going to be expecting? I'm going to be expecting a retest of this level. I'm going to be expecting a retest to give a double bottom, double top around this region for continuation to the downside. So my first entrance is going to be around this region. Maybe my entrance is going to be here. I think my entrance is going to be here. I just want to see a double top for continue. Once I see a double top around this region, wait for your confirmation entry. A double top around this area, I'm going to be placing a trade for a sell. I am bearish on BTC. I am highly bearish on BTC, at least to the 100% retracement. So I'm highly bearish on BTC. I'm going to be seeing what BTC is going to do. Bearish 80% to the tune of 80%. I'm bearish on BTC. So wait for confirmation, double top around this area. Wait for your confirmation, bearish engulfing candlestick pattern. Place the trade for a sell. Your second position should be the break of the counter trend line as well. So that's my thought on BTC as of the moment. We're going to have a push towards the upside and a continuation to the downside. That's my thought. A double top around that area, sell the market downwards, break of the counter trend line, open another position because the market is going to get to the 100% retracement or even more. So at least the 100% retracement. So that's my thought on BTC. The next pair that I'm going to be looking is GDP JPY. GDP JPY, on the other hand, I like what I'm seeing on GDP JPY. It's just a specific level that is getting me worried on GDP JPY. We have a double bottom around this area, triple bottom actually around this area, push the market upward. We have a consolidation, we have a push, we have a consolidation, we have a push. This consolidation is just similar like this one as well. So, and there's a supply region around this area as well that dropped the market drastically downward. So that's why I'm very careful around this region. When we go closer to our daily time frame and our 4 hour time frame, you see why I'm worried about GDP JPY because of some few levels that I'm still considering. Then we have a series of correction around this area, first touch, second touch, and this is looking like a third touch for a continuation to the upside. However, the candles are looking bullish as well. So just that I'm worried around this area because this resistance level around this area is what dropped the market downward, dropped the market downwards, dropped the market downward around this area. So yeah, so that's why I'm a little bit worried. But if you see the consolidation of, it's looking like it has held. So I'm going to be looking at what the market is going to do tomorrow. This is actually looking bullish to me. However, it has not closed above yet. Not yet. This is a correction that pushed the market upwards actually, which I like. So let's see what beat GDP JPY is going to do. I'm bullish on GDP JPY. On this pair, I'm going to be seeing what the market is going to do. Maybe if there is a gap around this area, I could buy the market upwards, buy the market upwards to I could buy the market upwards from around this region for continuation to the upside, or anywhere the market gap to, as long as the spread is not high, could buy the market upward. But what I'm going to be considering is this level. I want a break. Once the market begins to consolidate at this 100% retrace, in fact, when it gets to this level, I'm going to get 20% of my position and move my stop loss past break even. Once it gets to this level, the move gets to this level, I will move my stop loss. I will close 20% of my position, move my stop loss to break even. Why? Because the market can consolidate around this area and drop. Because this level has not been broken properly. You see, there's a rejection, there's a pullback, there's a rejection. So once 20% of my position it gets to this level, most stop loss pass break even, then wait for the market to break. Once it break above, then we have a continuation to the upside for sure. Once it break above this 100% retracement, we have a continuation to the upside. That's my thought on GDP JPY as of the moment. The next bit that I'm going to be checking is what oil is doing. Oil is looking very, very bearish as of the moment because last month actually closed bearish. So oil is really volatile as of the moment. We have a series of correction. We have a push towards the upside. We have this double bottom, which we took advantage of this trade to the upside. This bearish move we were not able to take advantage of because the market is really, really, really volatile. I'm not sure what the market is doing. This was a double top. This was given like a double top on the weekly time frame, and also it was given like an inverse head and shoulder pattern as of that time on the daily time frame. So I just stayed away from oil because I don't want to take trade that is unnecessarily. However, we're going to see what the market is going to do. If we have a consolidative pattern towards the upside, then a continuation to the drop. But if we have a series of correction around this area, consolidation around this area for a base, then we are going to have a push towards the upside. So, however, for now, we're still bearish, except if we have a base around this area, a series of base consolidation around this area for a continuation to the upside. So that's my thought on oil as of this moment. What pairs next? We have AUD, NZD, which I like as well. I like this pair. I really like this pair. I'm going to trade it next week. We have a series of correction around this area base, triple bottom that pushed the market upwards. Initially, I was telling you guys that this market has corrected, has pushed up significantly. There has not been any significant consolidation on the monthly time frame, and the weekly time frame is actually looking corrective. So this is the formation. So my prediction was actually correct. Because if you check on the weekly time frame, I was worried about this pair. Why? Because there's a series of correction. This is an exhaustion pattern. This pattern is an exhaustion pattern. That's why we have a massive drop off towards the downside. However, this is what I'm going to be looking at. I'll wait for a pullback. This is a nice drop towards the downside. However, I'll wait for a pullback to test this region or to test this region for continuation, at least to touch this level. Then when we get to this level, then we'll now determine what next this pair wants to do. But for now, this pair, we need a push towards this area or this area. Once I see a push towards this area, then I'm going to be expecting just a consolidation like this, or like this, or like this towards this area, or this area, then a drop towards the downside, at least to touch this base. When we get to this base, then we'll know what next to do on AUD New Zealand. So that's my thought. AUD New Zealand is clear. We're bearish on AUD New Zealand. So what next am I going to be looking at is US 30. US 30 is looking bullish. However, I did not take the trade because this consolidation is it's not clean. We have a series of correction around this area. Triple top. I thought it was a triple top for a drop, but the market pushed backwards and gave a bullish candle around this area. So pushed up. So for now, it's looking bullish if we break the 100% retracement, which I don't know what the market is going to do. It's looking bullish to me. So let's see what the market is going to do if we break the 100% retracement. However, yeah, US 30 is looking bullish to me, but I'm kind of not interested in taking this trade yet because if I wanted to take this trade, I'm supposed to take this trade around this level. Yeah, but let me see. I will be expecting a nice break above before I'm going to be considering this trade for. But however, I will choose the other pair over this US 30 as of the moment. We have Euro CHF. Euro CHF is also bearish as well, which I like. We have monthly time frame is looking bearish. We have monthly candle close, bearish. Then we have weekly is also looking bearish. However, I want a correction back to this region. Yeah, I will want a correction back to a pullback up. I want a pullback up around this area, just like this, because this is actually a base. This is actually a base. If you check, this is actually a base. If we have a break below, then correction, then sell towards the downside. However, I would like to see another push towards the upside for continuation to the downside. That's my thought on this pair. Why do I want to see another push towards the upside again to form another top just like this? We have a series of pullback around this area. So we have pullback. So it would be nice if I'm going to see another pullback to this region, then to drop it towards the downside. That's my thought on Euro CHF. Next pair that I'm going to be checking is Japan 225. But Japan 225 is actually corrective, bullish towards the upside. I took advantage of this trade towards the upside. However, the market is looking too it's looking too bullish already. I'm not going to be taking any trade here. I'm going to be expecting another significant correction again before I'm going to be taking a trade on this pair. So this pair for now, I'm just going to let it go. I'm just going to leave it because this is the place I would took a trade for a buy towards the upside. And I want another significant correction just like this before I'm going to be taking a trade for buy, for more buy. However, if I did not see another significant correction like this, then I'm going to be letting the trade be until I see a significant correction. Then the last pair that I'm going to be checking is GDP USD. GDP USD is looking nice to me as well. When we go to our monthly time frame, we're going to see what GDP USD is doing. It's actually looking consolidative around this area. Then this area has actually formed a triple top on the monthly time frame. Yes, and chart pattern on the monthly, this is going to give a very bearish move towards the downside, actually. We're expecting a significant drop towards the downside. So on the weekly time frame, this is also looking nice as well. So it's looking nice as well towards the downside. On the daily time frame, however, this is what I'm looking at. This is looking corrective. If you see, this is looking like it wants to form an X to E wave pattern, X to A to B to C to D to E. It's going to form a series of consolidation here around this area for a continuation to the downside. So double top or a touch of this region is going to drop the market downwards. So that's my thought on GDP USD. I'm bearish on GDP USD as well. 90% bearish on GDP USD as well. So just leave the consolidation, then a drop towards the downside. That's my thought on GDP USD. So that's the end of the analysis for this week. Let's see how the market is going to play out. This is looking bearish as well. I'm going to wait for the bearish move, not the bullish, because the max it can go is this region. The max the GDP USD can go is this region. So I'm going to be waiting for the bearish move. The bearish move is really going to be bearish because we have a triple top on the monthly time frame. So the bearish move is really going to be big, so I'm going to be waiting for the bearish move. So that's it. That's the end of the analysis for the week. Let's see how the market is going to play out.